Have you ever wondered if you could create a perpetual stream of wealth? Well, it's time to introduce you to a game-changing concept called infinite banking. Now in this video, I'll teach you a new way to build a secure financial future that your parents never taught you. All right, so first and foremost, the one thing you have to understand is that you don't need infinite banking to be wealthy. I know that might sound like it contradicted a little what I just said, but it's true. There are so many different ways to create wealth. I think you create wealth really well through business, right? You can create a great business that's profitable and be wealthy. You can create a lot of wealth through real estate. You can do a lot of things. Heck, you could technically even do it in the stock market, even though it's a lot harder to do. It's possible. But I'll tell you this, you can actually use infinite banking no matter which path you choose. This actually enhances and actually increases the wealth that you could actually create. But is it necessary? Of course not. Many people have done it before, but I'll tell you, there's a lot of wealthy people that have used it, and it's been a huge asset to them through their lives. So let's talk about a little bit more about what it is. So infinite banking, if you haven't heard of it before, it's using whole life insurance, right? Now, whole life insurance is different than term insurance or death insurance, where you have to die to get paid. Whole life insurance has that death benefit, but it also has a tax-free savings account in here. This is called the cash value. So it builds up cash inside of here, tax-free, earns more than 0.nothing% like you get in the bank, earns tax-free returns, and it has a death benefit. Now, what most people have done, especially in the here and now while they're alive, not when they're dead, right? But in the here and now, what they've actually done is that they can actually use this to double dip, right? And what that means is that as you start to build and accumulate cash inside this policy, you can actually leverage it. You can go to a bank or even just to the insurance company directly and say, listen, I would like to get a line of credit against the cash that's going to be here as collateral. So you can use this cash as collateral that you can get from this loan. So for example, what you would do is you would ask the bank, say, all right, I would like to get a line of credit against this. The great thing is when you get a loan from the insurance company, there are no minimum monthly payments. You pay it back however, whenever you want. The deadline for paying it back is your death. And they just take that piece from your death benefit and then pay your family the rest tax-free. But the great thing is that you have this tax-free savings account in here that you can be using that can get a line of credit against. And because it has guaranteed returns where they make at least usually 3-4% a year, the banks know that it's secure. They know that it's going to make enough money to be able to cover that debt. So that's why they'll give you the line of credit and not even require monthly payments. And so you get that money. What it allows you to do is that you're growing your money tax-free here, and it's compounding interest tax-free, usually at least 5% a year. And at the same time, although you're paying interest to the insurance company or to the bank, the great thing is that you're able to take that money and use it for whatever you want. And the interest that you're paying is generally less than the compounding interest over here. So you make money over here despite having that line of credit with the bank or the insurance company, and then you get that cash that you can use for however you want. Now, of course, you could just withdraw the money from your policy, but the great thing is that you don't have to. You can leverage it and be able to make money in two places at the same time. Essentially, double dip on your money. That to me is one of the most powerful concepts of this infinite banking, of using whole life. Now, just so you know, this does not mean using other types of insurances like universal life, like index universal life, variable universal life. It doesn't work the same way with those policies, and so it doesn't work well, and there's just no guarantees with those. This one has guarantees. It's guaranteed to always grow in cash value over time, and that's why the lending is so much easier. Now, you can use it in a lot of other ways too. So beyond the fact that yes, it could be a great emergency fund, you can use it because you can actually get to the money easily and earn more than 0.nothing% at your bank, and it's tax-free when it grows tax-free and you can access it tax-free. But the nice thing is too, there's no dumb rules, no 59.5 rule. You don't have to wait till you're a certain age before you can touch it and have penalties and stuff. In fact, people ask me, they say, well, if I borrow from it, do I have to pay origination fees, any extra fees setting it up? The answer is no. You just pay interest. That's it. Simple interest. It usually right around like 5% or so is what the interest rates are. So it's very simple and easy to use. Now, other people have used it before. I'm not the first one to ever do this. Obviously, this has been taught for years. And in fact, banks have been using it for years. Many banks use this as ways to get more leverage. They can actually lend out more money just by holding their cash assets inside of insurance policies that they get on their executives. You could actually do this through companies. You can do this even on your family members, right? You can do this on yourself. You can do this in all kinds of ways to be able to leverage it and use it however you want. Other examples that people used it beyond just using it for savings accounts, you could use it for retirement, of course. That's a great supplemental retirement that you could use. You can actually use it for investing right now, like I mentioned, where you can actually double dip and get your money to pay you. In fact, you can take the cash flow from those investments, pay back to the line of credit, and then use it again. So use that instead of using your bank account and make more money and interest by doing it that way.
You could actually use it as a college savings plan. Many people hate 529 plans and they'll use it for that. So a variety of ways you can use it. Other ways you can use it is you can use it as collateral for other types of loans. So for example, for one of my clients, he wanted to buy an office building. And the office building was going to be about $375,000 total with, having to build it out and everything else. Well, he had $300,000 sitting in one of his life insurance policies. He said, Chris, I'm thinking about just canceling this policy, taking all the cash out and using it. And I said, well, I wouldn't recommend that because if you cancel the policy, you lose your tax benefits. You can get taxed on the gains. So you not only get taxed, but also I think you could do something a little bit more creative to make you more money than that. And so what I had him do is talk to his local bank and ask them, say, will you use this insurance policy as collateral for this property? Now the bank's looking at this saying, wait a minute, we can get two pieces of collateral. Not only do we have the building that has collateral too, even though it's not quite worth the $375,000, but I also have the insurance policy for $300,000. They said, yes, absolutely. We'll love to put a lien against that policy. So the policy money is locked up. You can't use it, but it allowed him to get a mortgage on that building for interest rate that was 2% lower than the best rates that were available at that time. So he got this dirt cheap interest rate and a dirt cheap payment. And the cool thing is once he built it all out, he started renting out parts of the building. And so now his renters were paying his mortgage payment for him. Even better, after a year and a half, he went back to the bank and said, listen, the building's here. It's completed. Can I now take the lien off my policy, off the cash that's in my life insurance policy? And they said, yes, you can absolutely do that. And so they did, but kept the terms the same as if it was still there. So he still had the cheapest mortgage he could possibly have gotten, even cheaper than what the best people with credit would have gotten. And now he has that money free to be able to use again. And again, he's not the first person to do this. Even Walt Disney, when he was trying to get Walt Disney World off the ground, the banks didn't want to take that risk. They said, listen, Disneyland was good. That was a nice little project that you did there. Good job there, Walt. But this whole huge swampland, you want to do this on a bigger scale in the middle of nowhere, Florida? Nah, I don't know. That's high risk. So Walt said, what if I use my insurance as collateral, the cash that's in there, not the death benefit, but the cash value? They said, okay, yeah, you put some skin in the game there. We'll put in the rest. And so they did, and the rest is history. Even Pampered Chef, the seed money that started that company. I know that I would never known Pampered Chef had it not been for my wife, but that's the thing. Pampered Chef was started from her using her life insurance policy. McDonald's, actually, when he bought out the McDonald's brothers, Ray Kroc, used that to pay the executives. We even had in the Depression, JCPenney's used it to pay their employees when they didn't have any cash available during the Depression. And even General Electric, GE, they actually used it on their employees to help them pay pensions. And they would keep replenishing the pension fund. Whenever people died, the death benefit would pay back the fund, replenish the pension fund, and they could keep paying pensions for their employees forever. Thanks to the 401k, they didn't have to do that anymore. So they said, whew, we're off the hook, right? But that's the thing, guys. There's so many ways to use this. But most importantly, it's not just about how you can use it in the here and now, which I think is great. I think it's great to create the wealth now. But I know for a lot of my clients, the concern is they don't want to just create a bunch of money now and then their kids blow it all, right? Or they just ruin it. And someone will say, I don't even think I want to leave anything into my kids. And that's fine too. But some want to create what's called generational wealth, right? They want that to pass down from generation to generation to generation. The great thing is you can set up policies not just on yourself, you can set up on each of your children. They could set some on themselves as well and on their children. And pretty soon everything pays in the trust. Whenever people pass away, it goes into the trust. So you can keep building assets and at the same time, the life insurance death benefit, just like it did for GE, replenishes it and even can grow that wealth from generation to generation so that your family doesn't just blow it all, right? So that it can keep continuing from this point forward and on. And heck, even if you don't want to leave a dime to your kids, who's to say this can be a great way to pass on some tax-free money to your favorite charity or your favorite cause and allow that ripple effect to go on beyond your time, go beyond the grave that way. So there's lots of ways to use this both now and in the future and generations beyond you to create that ripple effect that can just make a major impact in your family's life and in the world around you. Hey, if you thought this was wonderful, check out this next video. What do the best infinite banking policies look like? This is important. This could save you literally hundreds of thousands, if not millions of dollars. Watch this video.